Thank you all for joining us for our SICSS-Howard Mathematica Lunchtime Talk. During these chats while you chew, you'll meet interesting people or organizations that are doing cool and complementary work to what you're currently learning about in the Summer Institute at Howard University. If you don't have your lunch yet, hit pause. For those of you with food and beverage in hand, let's get started. I'm proud to introduce some of our SICSS-Howard Mathematica alums who will introduce our speaker.
Thanks, Nanette. My name is Regina Ebo. I am a third-year psychology Ph.D. student at UC Berkeley and a SICSS-Howard Mathematica 2021 alum.
My name is Rashawn Miles, and I am a doctoral candidate at the University of Mississippi in the Department of Social Work. And I study compassion fatigue among nurses and social workers who work with clients with an infectious disease. And I'm also a SICSS-Howard Mathematica 2021 alum.
My name is Nayantara Biswas, and I'm a fifth-year PhD candidate in the Department of Economics at Clark University. In my research, I look at applied microeconomics topics with a particular focus on developing countries. I especially look at health, labor, and gender outcomes, and in my dissertation, I focus on the impact of local community health workers on maternal and child health and labor outcomes in India. I am also a SICSS-Howard Mathematica 2022 alumna. Today, I am honored to introduce Erin Troland, PhD, from the Federal Reserve Consumer and Community Research Section.
Thanks so much for this opportunity to present. My name is Erin Troland. I'm an economist at the Federal Reserve Board in Washington, D.C. I've been working at the Fed for about 4 years now. It's hard for me to count because of the pandemic. It's about 4 years. I came to the Fed from the Treasury Department, where I was working in the Office of Economic Policy there. And so I worked on kind of housing policy. When I worked at Treasury, I worked on housing policy that was mostly focused on homeowners and mortgages and kind of the more finance end of that. When I moved over to the Fed, the Fed is sort of known for monetary policy, right? Interest rates, macroeconomics, and there's tons of that goes on at the Fed. But there's the part of the Fed that I work in has sort of a bit of a different focus. The focus is on people living in lower income households and communities, and so that is sort of that motivates the research and the policy work that we do, and we kind of focus on the kind of people and places. That's kind of what I like to say, and kind of what's going on with households, what's going on with communities, and so these are sort of the things that we focus on. And so there's actually, there's I don't want to say that there's way more macroeconomists than microeconomists at the Fed, but there are plenty of opportunities for people who work on who are applied microeconomists. And I'll also say that that's also true for the Federal Reserve banks too, like the San Francisco Fed or the Chicago Fed or the New York Fed. There are kind of more applied microeconomic. There's more applied macroeconomics work going on there than you might guess from kind of the outside. I personally work on geographic inequality, rental housing, and public economics. But today I'm going to talk about some work on renters during the pandemic using a Federal Reserve Board household survey, which is publicly available. So if it sounds interesting to you, I'd encourage you to go to the website and take a look at the data. And I'm excited to share this work on renters to the SICSS community as an example of the broad range of things that Federal Reserve Board economists work on. So this is joint work with my colleague, Zafsha Merchant. And before I get started, I have to say the usual disclaimer that these views are mine and not those of my employer. Next slide, please. Okay, so I'd like to get started with a picture to kind of set the stage for what we're going to be talking about here today. So at the beginning of the pandemic, there was a lot of concern about mass evictions, right? So there was all this job loss, people were losing income. There was concern that people might not be able to make rent, they might not be able to make their mortgage payments, and sort of lose their housing security in the middle of a global pandemic. And so policymakers responded with lots of aid. There was, stimulus checks and rental assistance and unemployment assistance. There was an eviction ban, right? And thankfully, mass evictions were avoided. We didn't see some huge tidal wave of evictions going on nationwide. However, if we look at this graph, we can see that even despite all of this aid and going out into the system, we still saw an increase in the percent of renters who came behind on rent. So if we look at this graph, the bar on the left shows how many renters reported being behind on rent in 2019, right? So this is pre-pandemic. It's around 10% of renters, and that's behind on rent at any point in 2019. That number increased to 17% in 2021, right? And so we see this increase, and the question is, okay, what's going on? Who is behind this increase? So if we can go to the next slide, please. So the question then becomes, we see this big increase, but did the pandemic actually change who became behind on rent, right? Are renters who became behind after the pandemic somehow different than those who became behind before the pandemic began? And so you could kind of think this could kind of go either way, right? So, hypothesis one, you could think, yes, the pandemic actually did kind of change the composition of renters who become behind on rent. We could kind of think about this going one of two ways if we think the composition actually changed. So we could think on the one hand that there was an increase in the share of households who have low underlying housing insecurity who became behind on rent. So we can think of these types of households as renters in higher income households. They don't face regular challenges paying rent. And the pandemic recession caused all this widespread job loss, including among higher income workers. And so we could imagine that maybe there was an increase in the share of renters who were higher income who became behind on rent after the pandemic began. And I'll say, going into this, that was kind of what I thought was going on. I thought, okay, the pandemic is kind of this unprecedented shock, and like maybe it kind of pulled more people sort of under than it did than sort of pre-pandemic. But on the other hand, you could think that there might be an increase in the share of households with high underlying housing insecurity, right? So renters who are in lower income households, people who live paycheck to paycheck, for example, a car repair could come up and force them to choose between getting to work and paying rent, right? They sort of face these regular structural challenges in paying rent. And we could imagine that actually there was a larger share of these types of renters in lower income households that became behind after the pandemic. Why? Well, first, the sort of post-pandemic, there was this huge run up in rent prices, just double-digit increases in prices that we hadn't seen in a long time. So we might think that might hit renters in lower income households more. We also had the eviction ban, which may have allowed more budget flexibility in sort of prioritizing bills like utilities or internet. If you need your kids to sign on to virtual school, and sort of prioritizing those bills instead of and paying rent later. So we could imagine that yes, there was a change in the composition of who became behind, along with this increase in just sort of the amount of people who were behind. But on the other hand, you could imagine that actually it was sort of a similar composition of people who became behind after the pandemic versus before. There's just more of them, right? So that there was sort of like, you could imagine that there was kind of a broad-based increase versus an increase that was disproportionate to higher income or lower income. But until now, we didn't know the answer to this question. And the reason is, and I've learned this after working on the rental market for about 3 years now, there's just not a lot of good data on renters in terms of sort of timely data on payments and evictions. There's good data on kind of demographics and stuff like that, but payment and these kind of housing insecurity things, sort of real-time data, that just There's just not a lot of it. There's plenty of it for homeowners who have mortgages. They interact with banks and they collect data and all that, but for renters, it's a lot more challenging. All right, next slide, please. Okay, so why study this question, right? Why study whether the pandemic changed the composition of renters behind on rent? Well, it matters for the impact of all of that pandemic assistance, right? The stimulus checks, the unemployment, the rental assistance, right? And if we think back to if we think back to two different types of renters in higher income and lower income households, the impact of these assistance policies might be different depending on the kind of pre-existing circumstances for these renters going into the pandemic. So we could think of renters in higher income households, right? We have this short-term assistance, right? Helps them it's a one-time payment or a short-term, it's assistance that is only around for a short amount of time. And it obviously helps them get caught up on rent in the near term, in the short term. But since we could think of higher income households that's not having to face these periodic challenges paying rent, this could help them get back on their feet, kind of get back to their equilibrium and kind of prevent future rent payment issues. For lower income renters in lower income households, we could, of course, short-term assistance will help, but this is sort of solving the short-term problem, but not addressing the long-term problem, right? So short-term assistance certainly will help renters with sort of higher housing insecurity get current now, right, or in the short term, but it's not going to address this sort of longer-term structural challenge of sort of periodically becoming behind on rent. And these pandemic policies weren't intended to be long-term policies, but this is really more thinking about what is the impact of those policies. Next slide, please. Okay, so we're going to use some survey data to get at this question. We're going to analyze some data from the Federal Reserve Board's Survey of Household Economics and Decision Making, or SHED. So this is an annual publicly available survey, household survey. It's a survey that my team runs at the Fed. So we get to choose what questions go on there. So these questions that we're going to use were ones that we decided to put on because we were very interested in what was going on with renters, and we knew that there wasn't a lot of good data available. The survey is nationally representative. It's about 12,000 adults, and it is administered online. Next slide, please. Okay, the specific questions that we're going to use in the SHED, there are two questions on rent payment that we asked in the 2021 SHED. So the first question was, were you behind on rent in the past 12 months? So the survey was fielded in October of 2021. And so this question covers the period of October 2020 to October 2021. The next question is, were you behind on rent at any point in 2019? Right? So the first question is getting at sort of post-pandemic and post-pandemic, all this assistance policies going out, rent prices, sort of all the we can think of this as post-pandemic and aftermath, right? And then the second question is pre-pandemic, right? Before this big shock to the economy and everything that followed. And so from these two questions, we split renters into two groups. So the first group is behind on rent in 2021 only. So this is after the pandemic began. And so renters in this group answered yes to question A and no to question B. The second group is behind on rent in both 2019 and 2021, right? But before and after the pandemic began. And these renters answered yes to both question A and question B. So another way to think about this is we took all the renters who were behind on rent in 2021, and we split them into those who were only behind in 2021, post-pandemic, and those who were behind also before the pandemic began. And so what we're going to do is we're going to examine differences across these two groups in characteristics that correlate with housing insecurity from previous literature. And then we're also going to examine disparities in rent payment by race and ethnicity, also linked to previous literature looking at disparities in evictions. Next slide, please. So we're going to look at different factors that previous literature has found has correlated with housing insecurity. So there's previous literature has looked at evictions and sort of other types of housing insecurity. So we're looking at rent payment, right? Are you behind on rent or not? But there are other types of measures of housing insecurity that we can think about that other work has examined. So first being evictions, and second being this idea of rent burden, which is just the percent of your budget, your income that you spend on rent, right? So the sort of generally accepted benchmark of being rent burdened or sort of paying too much for rent is about 30% of your income. So if you're paying more than 30% of your income, that's sort of considered being rent burden. And so this previous literature looks at both evictions and rent burdens and correlates different factors, finds different factors that correlate with these other measures of housing insecurity. And so that literature finds income and age, presence of children, and race, ethnicity are all factors that correlate with housing insecurity. And so what we do with the SHED data, so the survey data that we're using, we ask these questions on rent payment, but we ask all kinds of other questions on demographics, on budget security, on all sort of different kinds of things. So we're able to measure some of these factors that previous literature has found correlates with housing insecurity. So we're going to use a measure, we're going to measure income in a couple of different ways. My preferred method is to sort of use a measure of what we can think of as usual income, right? So income that you would make in a typical year or a typical month, right? Versus income that you actually made post-pandemic that is a result of a job loss, which also led to you being behind on rent. So we can think of kind of current income in 2021 as being somewhat endogenous to rent payment. So we're going to proxy for this kind of typical income that you'd earn in a given year using education, parental education, age, and disability status. And then we're also going to be able to directly measure for presence of children and race, ethnicity of the renters in our sample. Next slide, please. Okay, so results, I'm going to kind of highlight what the key findings are, and then we'll go through some graphs to kind of show you the evidence behind these findings. So the first key finding is actually the pandemic did not change the composition of renters behind on rent. We see very little difference in these kind of different factors that correlate with housing insecurity for renters who were behind in 2019 only versus those who were behind in both years. Second, we find that both of these groups, those who were behind in 2019 and those who were behind in both years, have high housing insecurity, right? So contrary to kind of what I thought might have been going on, we didn't sort of see a bunch of kind of renters that look like they're higher income becoming behind on rent all of a sudden as a result of the pandemic. Both groups, those who were behind in 2019 and those who were behind in 2019 and 2021, both look like they have relatively high levels of housing insecurity. Third, and this relates again to the literature on evictions, we do find disparities in rent payment by race and ethnicity, but those all seem to be driven by economic factors. And I'll go into more detail on what that means in a couple of slides. But once we look at our group of those renters who were just behind, who were behind in 2021, we don't see a lot of differences by race and ethnicity once we're looking at just those who reported being behind on rent in 2021. Next slide, please. Okay, so I'm going to show a series of graphs that are going to look similar. So I'm going to walk through this graph on education first, and then we'll go through some of the other outcomes that we looked at. So this graph is measuring the education level of the survey respondent. And so there's sort of two relevant comparisons to think about here. The first is comparing the light blue bar to the dark blue bar. And so what we're measuring here is you can kind of think of these bars as histograms. So all the light blue bars are sort of like a histogram of education levels for renters who are behind in 2019 and 2021, right? And so if you add up all the light blue bars, they add up to 100%. Similar, right, for the dark blue bars, that's the same calculation, but just for the group who is behind in 2021 only. So I'm going to focus our attention all the way down at the bottom at the bars for bachelor's degree or more. So if we look at the top, if we look at the two blue bars, what this is telling us is very similar shares of renters in each of these groups has a bachelor's degree or more, right? And we can think of a bachelor's degree or more as a pretty good proxy for income, as a pretty good proxy for renters in higher income households. And what this is telling us is that, you know, the renters who were behind in both years, in 2019 and 2021, around 8% had a bachelor's degree or more, compared to 10% who were behind in 2021 only, right? So basically there's no difference here, right? And the black bars are showing 95% confidence intervals. So you can see that not only are those point estimates 8% and 10% very similar to each other, but they're also not statistically different from each other. Now, if we then think about the other comparison we can make in this graph, it's comparing the two blue bars to the gray bar. So the gray bar is throwing in a third group here, which is all the renters who were not behind on rent in 2021. And so what we can see is more than the share of those who were not behind on rent with a bachelor's degree is more than 3 times as high as the ones who were behind in 2021, right? So this is saying that not only are these two groups, you know, those who were behind before the pandemic and those who were behind after, are similar in terms of education level, but the education levels, they're the lower levels of education than those who are not behind on rent, right? And so this is kind of telling us, okay, you know, there was not, first of all, a big shift in kind of the educational composition of renters who became behind, but also it looks like, you know, the level of housing insecurity is much higher for these groups that did become behind. And then if we look at these other education categories, high school degree or less, some college, no degree, again, we see kind of a similar patterns, right? Where the two blue bars are pretty similar to each other. And then some differences emerge once you start looking at the group who's not behind on rent, right? Okay, so those are the results for education. If we go to the next slide, we can look at kind of other proxies for usual income, right? Income that you kind of make in a typical year or typical month, right? It doesn't look like, so the first group of bars is the same kind of histogram plots in a way, but instead of education, we're looking at age. It's not like, you know, the renters who became behind after the pandemic are all younger than the renters who became behind in both years, right? Because if we look kind of at the first couple of rows, these age groups are very similar across the blue bars, and also there's not a lot of difference even compared to those who are not behind on rent. If we look at the bottom, we also look at disability status, which also affects earnings, and we can see that. So this one, there is a bit, you know, if we compare the blue bars, 32% of those who are behind in both years reported having a disability versus 26% who were behind in 2021 only. We have a pretty small sample here. So the shed itself is 12,000 respondents, But once we are only looking at those who are behind on rent in 2021. So once you condition on being a renter and being behind, our sort of sample for this analysis is around 470 renters. So it's not tiny, but it's also not huge. And so it could be that so these differences in reported disability status, they're not statistically different in our analysis. So we don't want to draw strong conclusions here, but it's possible that there could be some differences in disability status that would come out if we had a bigger sample. Next slide, please. Okay, now these other factors that other literature has found have correlate with eviction, for example. We also sort of see fairly similar compositions of by race and ethnicity of the renters in the sample between the two groups. So again, the blue bars, if we look at the top three groups for race and ethnicity, fairly similar across the renters behind before and after the pandemic. There are some differences here, again, with disability, similar with disability status. They may be, if we had a bigger sample, we may be able to detect those differences, or they may just be sampling variation. We can't draw strong conclusions, but there's not sort of very, very stark differences that we're seeing here. And then if we look at presence of children in the household, we see sort of pretty big differences between those not behind on rent and those that are, right? So the two blue bars at 36% and 40% of children, or 40% of households that have children present, much, much higher than the group that is not behind on rent at 22%. Okay, next slide. Okay, so the other thing that we looked at was what were the sort of interactions with pandemic assistance programs. So we asked people if they received unemployment assistance, what was their interaction with rental assistance. And so if we look at the bars on the left, we can see that, again, let's just look at the two blue bars first, that basically the same amount, the same percent of renters behind in both years versus those behind only after the pandemic began. Similar shares received unemployment assistance, and those shares are higher than the 10% in the gray bar that received unemployment assistance that were not behind on rent. And then if we look at the bars on the right, these are those who applied for emergency rental assistance. And so we can see that those who were behind on rent, and sort of our two renter groups don't show big differences in who applied for emergency rental assistance. We didn't ask this question of those who were not currently behind on rent. And then if we looked at those who, if we were behind in 2019 and 2021 versus behind in 2021 only, if we then looked at who received rental assistance, that is a much smaller sample than we have kind of in our main analysis. There is some suggestive evidence that the renters who were behind in both years received emergency rental assistance at higher rates. But again, that's with the sample size, we don't want to draw strong conclusions there. Next slide, please. And so this analysis, this is a slightly different analysis that we did that kind of is related to previous work that shows disparities in evictions by the race and ethnicity of renters. And so what we do is we look at rent payments by we look at percent of rent payment by race and ethnicity, and we look for to see whether there are disparities. And so we do find disparities in rent payment similar to the eviction literature by race and ethnicity when we don't control for anything. We're just sort of looking at the overall shares of who's reporting being behind on rent in 2021. And so this is we're just looking at, we're not, in this analysis, we're not kind of splitting the renters, the pandemic versus not. We're just looking at, did you report being behind on rent or not? Because we're sort of relating this to the previous literature on evictions. And so again, yes, we do find, sort of consistent with that literature, disparities in rent payment by race and ethnicity, But then so we find that Black and Hispanic renters have higher rates of being behind. However, once we control for economic circumstances, education, parents' education, income, presence of children, all these things, we find that sort of those disparities get a lot smaller, and they are no longer statistically significant. And so what that's telling us is that, yes, overall there are these disparities in rent payment by race, but what are they driven by? They're driven by these differences in economic factors, right? And those differences in economic factors can be driven by things like labor market discrimination, housing discrimination, discrimination in credit markets, and all of that is sort of getting channeled through kind of these measures of economic circumstances, and that's what's driving these disparities in rent payment overall. Okay, so to conclude, right? So we basically in this analysis we were investigating the question of, did the pandemic cause a fundamental shift in the pandemic and its aftermath, right? Cause a fundamental shift in the composition of renters who are behind on rent, right? And what we found was that no, there wasn't a big compositional shift, right? There was sort of a broad-based increase in renters being behind on rent across sort of different education levels and other measures that are correlated with housing insecurity. But we didn't find that the pandemic disproportionately increased certain types of renters by renters as categorized by measures of housing insecurity. We didn't find that, say, the pandemic disproportionately increased the share of renters who are in lower income households or higher income households who became behind on rent after the pandemic, right? And this is, and so basically what this is kind of showing us is there are these pre-existing structural factors, right, that are affecting renters with these kind of higher levels of housing insecurity, and the pandemic kind of exacerbated that, right? Just because kind of pushed more renters over the edge who are kind of already close to the edge before the pandemic, right? And this isn't to say that some higher income households did become behind on rent in 2021. We can think again of that figure looking at the difference in the share with a bachelor's degree, right? Around 10% of renters were behind on rent who had a bachelor's degree in 2020, or sorry, who were behind in 2021 had a bachelor's degree or higher, but that was a similar share to those who were also behind in 2019. So we didn't see some kind of disproportionate increase in renters in higher income households as a result of this kind of big, massive, unprecedented shock to the economy and its aftermath. And so to think about policy, the kind of implications for these findings, right, is that most of this increase in the increase there, the 17% of renters who became behind on rent in 2021, right? The short-term assistance, that the rental assistance, the unemployment assistance, all of that will certainly help them get caught up, right, currently. But it's not going to address kind of the longer standing structural issues that can cause persistent housing insecurity. And I'll stop there. Thank you very much.
Thank you for joining us. I know our participants are looking forward to live Q&A with you during the Institute this summer. Thank you all for watching. For more information on SICSS-Howard Mathematica, visit our website, follow us on social media, and join our email list.